Hello, Srijit.
Hi.
So we are here to discuss about the union budget that came out on 1st of February. So one common question, one fact that created a lot of uproar among the community is the 12 lakhs rebate. So there are a lot of new discussions that are coming up. So before we go into all that, what do you think? From an NRI's perspective, what do you think about the budget?
There's nothing specific for an NRI community. If you see, the budget is more from a larger audience in India. It's a very objective budget and very it's clear. I would say that planned budget and maybe targeted budget, objective budget. You can call all these terms, but budget is predominantly been serving the larger community. So you had last year you had a 7 lakhs up to 7 lakhs. There was no tax in India. That is, right? Now that 7 lakhs rebate, now they extended till 12 lakhs. So now up to 12 lakhs, there is no need to pay any income tax in India. Now, when you see the overall picture, in India, out of 140 crore people, you can see around 7 crore individuals file tax returns, pay tax, whatever you call. And up to you put around a slab in that format. More than 15 lakhs taxpayers, those people who offer income more than 15 lakhs, hardly around 65 lakhs people.
Very nominal.
Very nominal. Very 65 lakhs people only pay tax, actual income tax to the government as a revenue. And that below up to 15 lakhs, if you see around, I would say that around 6.45, around 6.5 crore, almost 6.5 crore people are actually not paying tax in the form of money to the government. So anyway, they're not paying money. They are also giving a rebate. Okay, you don't need to pay. You are actually been out of the tax bracket. So now the government is actually literally not actually been giving any benefit to those taxpayers. They are offering income more than 15 lakhs, no benefit, no incentives, and up to 12 lakhs, there is no need to pay tax.
Okay.
But what is missing here? They are not saying you don't need to file tax returns.
Right.
It is mandatory you file a tax return.
Correct. They brought it as a concept of rebate.
Absolutely. And that means you should claim. They are giving the benefit of tax exemption up to 12 lakhs. That means you're supposed to claim it back from the government. So that means last year you had up to 3 lakhs, there is no tax. So up to 3 lakhs, there is no tax, means there is no need to file tax return also. But now they have extended that slab from 3 to 4 lakhs. So now up to 4 lakhs, there is no tax. 4 lakhs to 12 lakhs, if you have an income, you can claim in the form of a rebate, an exemption. For that, it is mandatory you file tax return.
Once your income crosses 4 lakhs, it is mandatory to file your returns.
Absolutely. You should file return. That means, though you are not out of the scope of taxation, you are within the scope of taxation. And those people are showing tax returns, showing income between 4 to 12 lakhs as a rebate. What is very important, you need to be careful in terms of your spend, because today everything is in UPI in India, right? So the moment you offer income, say I have only 10 lakhs, I have only 12 lakhs income, correspondingly you need to check how much money you really spend through UPI. So it should not be a case you offer 12 lakhs as an income, comes under the rebate category, and the other side you spend around 50 lakhs as an income. So then this may not match. So they are really not concerned really about your income. They are focusing on your spend. That is the reason if you see overall they create a system in such a way you feel you have more disposable income. Since you don't have a tax payable up to 12 lakhs, you believe I have so much of money I have in my pocket, now I'm going to spend. So the shift is happened from the direct tax to indirect tax. When you spend, technically you will have more GST comes, you have a more GDP will grow, and that is the reason you see a lot of credit facilities being given to the people, right? So all the banks are actually giving so many. You will have a lot of offer from credit card or a lot of loans will be available. So when you have that kind of money, you will start spending. So what is very important, especially to those people, really they get the money in your bank around 50 lakhs, kind of 60 lakhs. Then only you spend, right? When you get, only you spend. So when you spend that kind of money in a particular financial year, your financial discipline is very important. Your documentation is need to be very perfect, because every naya paisa will be counted in India. What you spend, because of every transaction is being under scrutiny. And then in 2025 we are talking, you may get a notice in 2030 or a 2029 to cross check. You may not remember those things, transactions, what you really spend, right? So this is a outcome from this budget.
Right. I mean, even from our past experience, the government has shifted its focus entirely into expenses.
Yes, absolutely.
So when they're giving such a benefit, it's I think it's indirectly implied that your transactions in terms of investments are going to be monitored more.
Yeah.
So even though you might not be filing your returns or showing that kind of income, your investments are going to get tracked, and ultimately you might end up paying
now
more tax.
I doubt whether really people concerned about the investment side, because they are more on there is no
Right. Now there's no more an incentive for making those investments.
life insurance or a mutual fund. Early days, people consider a mutual fund, LIC, all those is basically a tax exemptions and investment on a long
That's how
term
it started
retire.
getting more attractiveness
at that
because
time.
of the tax benefits attached to it.
Now, what do you do investment on LIC? Even now, you received your contributions, whatever you from the LIC redemption also now comes under the tax bracket. Yeah.
So from an NRI perspective, you're saying that, I mean, like we know, 12 lakhs is not a number that an NRI should actually be very excited about.
That's
for them,
very, very important information for an NRI perspective. We're talking about all the story of 12 lakhs, the rebate.
it's all only for residents.
That section 87A rebate is only available for a resident individual, not for a NRI. Non-resident. So non-resident is still is required to pay tax the moment you cross 4 lakhs taxable income. 4 lakhs taxable income.
So the rebate concept is something that is, it's something only available for the residents.
Yeah.
So what else is there in the budget, that an NRI should find relief from? Just the 1 lakh additional exemption in terms of income.
Absolutely. Earlier it was 3 lakhs income. Now it's basically become a 4 lakhs income. That 1 lakh you have a kind of a additional bracket is being changed. So here, what is also very important information most NRIs may miss out. Your taxable income of 4 lakhs excludes your capital gain, your short-term capital gain or your long-term capital gain, your dividend. For resident, dividend comes under the slab rate. But NRI, the dividend comes under the 20% flat rate. And so you always need to check your taxable income, the 4 lakhs. You need to see the breakup of what are the components of that 4 lakhs. It could be interest income, it could be rental income. Those are the only 2 categories of income. Or maybe you have a very rare, any NRI might have a professional income or a business income from India. That may also come under this 4 lakhs category. So here you need to read TDS is also together. That is very important, because you have a 4 lakhs is your total taxable income. You may believe I don't need to pay tax, I don't need to file a tax return. That's perfectly right. But you need to check whether is there a tax deduction is been happened. That 4 lakhs. So both interest and rental income, TDS rate is 30%. For an until unless you don't claim any tax benefit from the treaty exemption, technically you will have a 30% tax deduction. That tax deduction, if it crosses 25,000 rupees, then it is mandatory to file a tax return.
It's even otherwise mandatory to file it. Even if your income doesn't cross
even
4
you
lakhs.
have only 1 lakh is an interest income, 30,000 rupees been deducted, it is mandatory, it is filed, you need to file a tax return. This is also most NRIs may miss out.
Correct. So when from the point of return filing, it is not just 4 lakhs that you should actually be looking at.
Absolutely.
All the TDS deductions, everything comes into picture.
Yes, absolutely.
So like the point that needs to be stressed is, even though there is a basic exemption of 4 lakhs, when NRIs think if you're someone who's into share market, investment activities, capital gain, everything comes at a flat rate of tax. So even if your income doesn't cross, total income from dividend may be only like 1 lakh. So you'll still be required to file your returns.
Absolutely. You may come under the tax filer category.
Correct.
Tax file. The moment you come under a tax filer category, and then all your transaction also comes into the picture, like NRIs typically invest in mutual fund or deposits, all those things. No, then again further question will come. Okay, why this investment, your FD, all those things is actually not aligned with your taxable income. That is again a different topic altogether, but nothing relevant for this particular budget. But budget overall is basically very impressive for a general public and middle class people in India. In India, that is very important. Basically, the Indian resident people will be very happy. But when you say happy, around 140 crore people, hardly the tax filer, those people offer income between that 7 lakhs to 12 lakhs is only 1 crore, around 1 crore. So those people also come within that your majority people.
Additional 1 crore that is benefiting from the
yeah, absolutely, because hardly no tax collection in that side. So the majority of the tax filers comes beyond that 15 lakhs category. That's around 65 lakhs. So what will happen overall, if you see those people though exempted, gradually what will happen, all those exempted category may fall into the larger crowd later stage, because your transaction is under scrutiny. Today you think only 1 crore people only earn income more than 15 lakhs in India. That is a basic knowledge, no? So in India, that is not the taxable income category. Only 1 crore people only in India earn more than 15 lakhs taxable income. So they also know. So that they also know. So it's all part of that particular transaction. Every naya paisa will be counted when you spend in the market.
Right. Another thing that sparked quite a debate was the finance minister in her speech has mentioned that she'll be tabling the new finance bill the next week, this week.
Yeah.
So what do you think that we can expect from that? What do you think is in line in that bill?
Yeah, that's very interesting. So you see the direct tax code, it's not something new so far. We've been discussing last 10-15 years, we've been discussing direct tax code may come replace the existing Income Tax Act 1961. So if you see the finance minister mentioned, I think it's mentioned we may bring that half of the existing law.
Right.
The existing the income whole act become a ready. But eventually, if you see the existing law, the Income Tax Act 1961, actually the existing 50% of the provision is redundant.
Right.
You know that, right? So it's not, we never use all the sections because all those sections is dead sections because not
Most
operational.
Most of the times you'll read the section in the end just to find out
this was over 2017, 2015, 2012, 2012, all those redundant sections in that. So if you remove all those sections itself, the existing act itself will 50% of it. Okay. And further may refine all those things because today there is not much of availability in terms of deductions or exemptions or nothing is available. If you see the overall business perspective also, nothing available in the new bill. Tomorrow, the maybe direct tax code may become so simple. Your income will be like gross receipts, your cost, you spend money. Okay, the cost what you incurred, net result is your income, pay tax. So sometimes even your gross receipts deemed profit may come like 25%, 20% is a deemed profit, then pay tax because they don't want to question your expenditure. They might be expecting a minimal level of taxations. So shift will happen more from a direct tax to indirect tax. So basically India is a very consumer market. People spend. Nobody think about today's generation. Actually, nobody think about saves, right? They also know that they want to spend. Okay, you buy clothes, have food, and watch movies and popcorn. All those things. They know all those things. You have a spending habit is actually been quite a lot in India. So they also know that actually targeting in income tax instead of income tax, actually like can focus on the GST. And
probably whatever they are foregoing through direct tax, they are probably expecting to recoup through
they
GST.
create an ecosystem in such a way you will have a more credit facility, you have more loan facility, you will have more fund at your disposal, then you spend more money. When you spend more money, they will check whether what in the other side how you earn those money to spend this money, right? So they will have a cross check. Then those people have spent around 50 lakhs, 1 crore, because today it's practically very difficult to spend 1 lakh rupees without address of income tax department. Today cash is not available, and even want to have a cup of tea also, that's again comes through UPI. So every rupee what you spend, it will come under the scrutiny with the notice of the government, and so they will track in future.
Then another interesting point that we noticed, which NRIs might find interesting is the concept of updated returns. So earlier you could file your updated returns till 2 years, 3 years from the end of your financial year. So they've extended that to 5 years also.
Yes.
So why do you think government is pushing years behind and getting people to file their returns?
So again, they want more tax compliance in the system. They don't want to leave any person. You still give them an option, said you have an option, still file an updated return. So the moment you file an updated return, may think, okay, why should I file a return? To you want to prove you are an NRI in India, you need a document. IT return is only document to prove that you are an NRI. Okay, so that way you can use this benefit of updated return for the last
But
5
then
years.
again, like one thing most of our clients also is going to come back and ask is like, can I use this facility to claim back my TDS credit?
Not possible.
So that is not possible.
Yeah.
So effectively, if you only have some form of tax payment that you need to make to the
Yeah.
government, that you can use
True.
this facility.
True.
So I think in a way they're trying to increase compliance, getting people to pay more tax.
Compliance will become more and more interesting. Here, one important information, maybe I think we should do a separate video on it. Actually, the IFSC.
The gift city
Yeah,
and
absolutely.
stuff,
Gift
yes.
city and the so last 4 years, if you see continuously, income tax department is giving the
Lot of
exemptions,
incentives.
lots of incentives and exemptions is actually for the NRIs. Especially, they can evaluate this as an option for making a future investment even in India. In IFSC, why should you invest in Singapore or a Mauritius? Your fund you want to park it in outside. So the government is created an ecosystem. Don't go to Singapore. Come to India. You have a Gujarat. You have an Indian passport. Anytime you can get into the particular IFSC center and check your documents. Okay, that's actually a very good option, and lots of, we can see that all if you know that all the deduction exemption is actually clubbed now, is only available in gift city.
IFSC, yes.
IFSC, and that's maybe not fair only to keep it in only in Gujarat. Okay, so IFSC center actually, though, they should allow it in Kerala, they should allow it in Tamil Nadu, they should allow it in Andhra, because potentially, you will have a homely feeling, right? When you have an IFSC. So that is something maybe they can consider. I don't know whether they really evaluate that is an option, but gift city is an option for NRIs can consider.
Even from the ULIP angle, I think they've brought in some new change, right? Regarding the withdrawal at the time of redemption, ULIPs will be treated as equity-oriented units.
Absolutely. That is also a very important amendment happened in the unit-linked insurance policy. Earlier it was taxed as an income from other sources and taxed at 30%.
30% slab,
Now
yes.
that reduced to capital gain. And it's only
Using a flat
12.5%.
rate,
12.5%. That's actually a very good incentive, good amount of tax benefits available. Moving that, they consider it as a capital asset. That is also a good move.
That was also a good move. Apart from that, I don't think much for an NRI to expect from this budget. Probably something maybe from the direct tax code or something maybe we can expect.
So once the direct tax code come, we don't know what shape
when
it will.
going to, also not sure when it's going to become effective.
And
Probably
we
after a
have
lot
no
of
idea
debates.
since with our experience so far last 10 years, until and unless they say this is a law, this is a bill, then only actually we should actually start discussing on that point.
Correct.
Otherwise it's all hopes.
Yes.
And
There's a lot of
assumptions.
speculation and
So many people
expectations.
have been talking so many ideas. Even I never seen any hopes or assumptions. They come in the form of an act or a bill. Anyway, overall, it's good for the general public and people of
the
India.
residents, especially the salaried community. And
Yeah, they will be very happy and very happy. In the same time, one advice to everyone: please take care of your compliances very strictly, because today what you spend, tomorrow you are answerable.
Correct.
Okay, thank you so much.
Thank you, Sridhar.